Early look at what we should be expecting from the local market with Stan Shamu from IG in Melbourne. Stan, plenty of action on the macro front this week with central banks meeting. What can we expect from the FX space?
Yeah, morning. Absolutely. It is a massive week on the macro front. We've got the RBA, the Bank of Canada, Bank of Japan, Bank of England and the European Central Bank all expected to meet this week. Although consensus is mainly for all these central banks to stay on hold, there's still plenty of action to look out for, with potential for quite a bit of volatility across the boards. Of course, at the moment, risk remains fairly mixed to steady, with most of the risk currency pairs just managing to hold some key support levels, with the Aussie dollar just holding that 102. We've got the euro dollar just holding onto that 103. But of course, I think at the moment it seems there's more potential for downside than upside. With the sequestration kicking in, so to speak, it certainly seems like a lot of investors out there are still quite optimistic that US leaders will knock something up at some stage in the near future and prevent a further deterioration on the GDP front from these spending cuts extending into the year. But of course, it certainly looks like US economic data is continuing to support risk to an extent. It's showing signs of strong improvement, but we can't really rule out an event where politicians in the US continue to scramble and not come up with anything concrete enough to help buoy some of these risk markets. Outside of the risk space, I suppose we've got the dollar yen continuing to power ahead. The BOJ nominee, Kuroda, is set to attend a parliamentary hearing today, and that sparked some expectations for further dovish comments on the yen, and potentially this might lift up the Nikkei quite a bit and see it outperform Asia today. We're currently calling it up about 0.9% to around that 11,715 level. So that's definitely the index to look out for in Asia today. But outside of this, the Aussie dollar is definitely in for a big next couple of days. Apart from the RBA decision today, we kick off with MI inflation expectations. We've got ANZ job ads. We've got building approvals, and we've got company profits as well set to hit the wires. Now, should most of this data disappoint, we're likely to trade below 102. Of course, the Aussie dollar just seems to be under pressure at the moment, with most of the economic readings remaining fairly benign, but I think expectations overall are for the RBA to hold on to this 3% level and see how things play out over the next few months before finally pulling the trigger, if need be, maybe around June. So from expectations of a rate cut in February, it certainly seems like most analysts are continuing to extend this this holding period for the RBA, as the mining cycle doesn't seem to be quite to have peaked quite as badly as everyone was expecting initially. So at the moment, it certainly seems like risk is quite steady, but we've got a key week ahead, and we certainly might see some quite a bit of volatility across the board.
Okay, let's talk about the opening calls here at home. SPI futures down 5 points at this stage. Does that sound about right to you?
Yeah, we're currently calling the Aussie market down 0.3%,
okay.
So that's about that 50, maybe 77 level. So it's not too bad, I suppose. But of course, with futures still closed, it's really hard to get an accurate read on a Monday. As well, there's been a little bit of negative tape across the wires, starting with US House Speaker John Boehner saying no headway has been made with President Obama on the spending cuts negotiations for a deal. At the same time, we had the China Services PMI number largely disappointing, showing that the economy has expanded at the slowest pace since September. So that might feed through to the local market as well. Of course, on Friday we got that manufacturing PMI from China, which showed that they're starting to moderate as well. So I think there are fears that China's recovery is stalling now, and it might start sidelining for a while, and this might be a cause for concern for the Australian market. At the same time, we've got a pretty big dividend coming out today, I think to the tune of around 13 points. We've got the likes of AMP, BHP and Brambles all going ex-div amongst others. Of course, with BHP, we're currently calling it down, I think around 1.7%. So that's around 62 cents. They're going ex-div for 55 cents. So they're only looking to be down about 7 cents on a net basis. But eventually we've got the resources looking fairly benign after commodities struggled on Friday. This might see most of the resource space get off to a soft start. But in recent times, I think we've seen most investors quite willing to buy these dips in the market. We're still in a monster uptrend, so this might support the market early, but we certainly feel there might be a little bit of caution heading into the next couple of days of data. Of course, tomorrow that's when we get the RBA coming out. But we also have retail sales and the current account data as well, so that might make a bit of a difference to how the market trades. But yeah, no, absolutely, we probably will start off the week a bit softer and see if we can hold on to that 5,000 level should investors decide to buy on these dips. But certainly the upside is unlikely to test the highs until we get a bit more definitive sort of a statement from the RBA and what the expectations for rates are going forward.
You have to wait for tomorrow afternoon. Stan Shamu, thank you very much.
Cheers, Kate.
Well, there could be a new weapon in the ATO's arsenal. The